We have Peter Cardillo of Spartan Capital Securities joining us now on Skype. Hi, Peter. Good evening here from New Delhi. This is Ruchi Bhatia. We're seeing deep pain coming in for the US markets, of course, after the comments of Donald Trump, which means we're in for a lot more pain, especially for US markets, despite the big package that was announced just last week.
Yeah, well, obviously, the fact that the president last night said that the next 2 weeks are going to be very sorrowful weeks, that obviously has raised the fear factor. But, this market has discounted a lot of this fear. And I believe that the market has already placed in a very serious recession, earnings decay, and of course the
Okay, I think we've lost that line with Peter. We will be trying to connect back to Peter in just a while from now. But if you see the US markets opening significantly lower, Dow, S&P 500 losing almost 3% each, Nasdaq also slipping down close to 2%, and almost a 800 point fall coming in for Dow, mostly on account of those concerns coming in for the US markets on the COVID-19 outbreak, and of course the sentiment being hit by Donald Trump's comments as well. But back home for Indian markets, let's take a look at how we did as well today, and not a great start for our quarter as well. We're seeing how the markets today really taking it on the chin once again, erasing all of yesterday's gains, concerns of course mounting on the number of cases that are rising for coronavirus back here in India as well. We're close to the 1600 mark. Delhi's Nizamuddin could turn out to be the next big hotspot. Almost 2300 people were evacuated from there. Let's take it across to Avan Duba. She's joining in with a detailed market wrap of how the Indian markets acted today.
Really just flattered to deceive, because today, if anyone was made a big joker of, it was the bulls. Threatened yet again in today's trading session as we languished, and by the time we shut shop was lower by nearly 350 points to end at 82.53. For the Sensex, 1200 points off. The broader end of the market too saw deep gashes. IT was the biggest casualty, followed by the Nifty Bank, Media, FMCG and Infrastructure, with the breadth clearly in favor of the losing side. Take a look at some of the large cap stocks and the kind of deep gashes that were witnessed today. You had a Kotak Bank seeing a near 10% downtick, Tech Mahindra, TCS, UPL down and out, HUL, Britannia, BPCL, pretty much nothing spared, and a handful of 3 to 4 stocks that held out in the green. A whole host of newsmakers led by Kotak Bank, and that's largely on account of the revision in the foreign limits on the MSCI, that being deferred to June. You also had a whole host of those PSU banks that were in focus today with respect to the big PSU bank merger taking effect. Now only 12 PSU banks. Auto sales, well, driven off the cliff, if you will. You had March's auto sales numbers, which disappointed. A big drop for Aisha's CV numbers. Ashok Leyland, M&M volumes taking a serious hit. Meantime, HUL in focus, they completed the merger with GSK Consumer Healthcare. SpiceJet was another stock in focus. They did say that they will be paying some of their staff salaries, and this is going to happen in 2 installments. We spoke with the management of HPCL, who said that they are ensuring all petrol pumps are open and LPG cylinders are delivered to customers, just finding out how some of the essential services are panning out. GM Breweries getting the license to manufacture sanitizers from the FDA, and that stock too was another newsmaker. The broader markets, you could say, in comparison to the frontliners, had a fairly measured fall, although there were a whole host of casualties. Jindal Steel, PVR knocked hard. Phoenix Mills, Escorts, KEC International, Mindtree, SEAT, as well as TVS Motor, Teamlease, New India Assurance, all of which took a big hit. While on the flip side, Infibeam, GSPL, Prestige Estates, and so
Okay, that was how today's market action panned out, but we were talking about the commodity markets and the oversupply concerns coming in for Brent. Joining us now on the phone line is Jameel. Hi, Jameel. Good evening. This is Ruchi Bhatia. Just a couple of days ago, we were talking about how there seems to be no bottom coming in for the oil prices. Now, once again, oil falling on the back of oversupply fears, U.S. inventory growth. Where from here as far as commodity prices go?
Good evening. Thank you so much. It's lovely to speak to you all again. Okay, so essentially, oil prices, it doesn't make for a good headline, but it's still very dark and overcast weather around with the virus fears and so on. For oil prices, this essentially means that we're looking at a sustained risk that there will be a drop below $20 for a long time. And we hadn't seen a low level of oil price for a sustainable period since the 1990s. Yes, between 2000 and 2003, oil prices did dip below $20 at times, but they never remained there for long. But in the 1990s, this happened. And given the real dark warnings that are being provided, even just over the past 24 hours, when it comes to the virus, you've had President Trump, who's very much changed his tune on when it comes to how serious this virus is to the United States. And you have the United Nations Secretary saying that this is the biggest threat to the world since World War II. So that just says how big this virus impact really can be to the global economy. And for oil prices, you can't see a positive from this scenario.
In fact, we are seeing how the rift is widening within the OPEC as well, and that has heightened some of those oversupply concerns for Brent. But just yesterday, the U.S. President Donald Trump had a conversation with Vladimir Putin as well, trying to see if Russia and Saudi can both come on board. But this is, of course, coming in at a time when, Jameel, there are also concerns that perhaps the world may run out of storage space for oil, and that would mean that once again we will see prices falling, isn't it?
That's exactly the point. We are not looking at any one isolated or idiosyncratic factor that's driving oil prices here. There's so many different factors in play, including what you just correctly pointed out, how oil is stored, you've got the virus impact, and you've got the rift between Saudi Arabia and Russia, which you alluded to. Look, if I think of the Saudi and Russia rift, it's like, two major alpha males pumping their chests at each other, but you don't know which side's going to back down. And the truth is neither side's going to back down anytime soon. So I would think that anybody who holds hope that Russia and Saudi Arabia can set aside their short-term differences, this isn't even the medicine for oil prices, because demand is collapsing based on the lights of the world economy being turned off.
All right, Jameel Ahmed, always a pleasure chatting with you and getting in your perspective. Let's get Peter Cardillo also on the line. We were talking about US markets when the line got disconnected. Peter, perils of live television, what can we do about it? We're all working from home, so I think our viewers will also have to brace for little glitches here or there. But you were making that very interesting point about the US markets, how we could be in for the painful quarter for the next few months after the US President Donald Trump also said that we should brace for 2 weeks of pain coming in.
That's correct. And, considering that type of announcement by the president, you see the markets are down, but they're recovering from the earlier losses at the opening. And I suspect the reason for that is that this market has already discounted a nasty recession, decaying earnings over the next quarter. And so a lot of the negativity is already placed in the market. So what we have here is a typical bear market movement where you have some rallies and then you have news that raises the uncertainty level, and then, of course, you go down. But I truly believe that we've made a bottom. I doubt very much, unless, the coronavirus news worsens to the point where it's going to linger for another 6 or 7 months, then I'll be totally wrong. But it appears that maybe here in the States, over the next several weeks, we might be reaching a peak of that curve, and if we do, that means that this market has discounted the worst. And I kind of believe that this is giving investors a great buying opportunity. They shouldn't panic at these levels. If anything, they should be buying. There are a lot of stocks that, as I mentioned before, have already discounted a lot of worst case of the worst case scenarios. So, as another thing.
Peter, let me just come in on that. You are saying that this is a good time to buy. Peter, let me just come in on that. You're saying it's a good time to buy, but if we see the world economy contracting further on account of global coronavirus concerns and the outbreak, wouldn't that mean that, the recovery from these levels will take a little while longer?
Yes, the recovery might take a little while longer, but I think that a lot of prices are just at levels now that are reaching exhaustion levels. In other words, where are we going? 1 time earnings, 2 times earnings, 3 times earnings. This happened back in 2008, 2009 during the financial crisis when the market really fell out of bed and the losses were even greater than they are now. So this is a totally different situation. And if the virus begins to reach peak levels, that means that perhaps within the next 4 weeks, the economy can reopen. And a lot of these losses in terms of monetary losses can be recovered. Now, not at a very quickly pace, but I'm referring to job losses. I'm referring to production, and the production of a lot of these companies can come in full swing, and so that should lessen the fear factor of earnings continuing to fall in the future. Now, again, I want to be very clear. This is predicated on the fact that over the next several weeks, we could be reaching a peak point. If that doesn't happen, then obviously I'm going to be wrong. But if the situation stays status quo,
but Peter, let me just come in on that. A lot of people say that this is the worst bear market that they've seen in their lives. And every time we do see a bear market, the way back up is very slow and painful. I understand the point that you were trying to make, that, these are good times to perhaps invest. But the other side to this is cash is the king. You better sit on cash right now.
Well, look, let me first address that by saying this. I've seen very, very bad times in the market. I've been doing this for over 50 years. And so I've been through crashes. I've been through some serious recessions, obviously the Great Recession of 2008. Certainly I've never witnessed a depression. Yes, these are hard times. Yes, it's going to be a severe recession. And it might even get to that temporary phase of, it might even get into a deflationary short period phase. Now, again, this market has discounted a lot of that. And that's why I'm saying I think it's a good buy. Again, this was not created, this bear market was created by a health issue, not by a financial issue. And that health issue can clear up if we begin to see peak numbers and the curve begins to go towards the downward slope instead of the upward slope. So it's based on that. And I think that with the preventions that many countries, and obviously the United States, have taken, social distance, that those numbers can begin to come down over the next several weeks. And so with all of the massive amount of monies that have been being pumped into the economy by the central bank here in the States and other central banks around the world, that blow should not be as severe as, let's say, the blow of the 1930s. Remember, in the 1930s, the central banks didn't come out with such huge, massive programs.
All right. All right. On that note, Peter, always a pleasure chatting with you and getting in your perspective. And that was a very interesting point that Peter was also making there, that it's not as bad as what we saw back in 1930.